Ladies and gentlemen, welcome to the Fintech Frenzy. So today we got all SoFi news once again. I mean, there were some other things, but I just pushed it off till tomorrow. So anyone not expecting SoFi news or wanting anything else, time for you guys to go. It's all SoFi today. We got Anthony Noto speaking at on CNBC this morning, and I want to watch that with you guys for anyone that missed it. And I want to go through, add a little bit of commentary. There's some things that I want to point out that are pretty interesting. And then some other things on the back end that have also been happening with SoFi that people may have missed in the news. But that is the day today, ladies and gentlemen. So strap in. It's going to be a fun one. And hey, stock is up nearly 3% on the day, 2.98%. When Anthony Noto speaks, the stock rises, I guess. That's just what happens. I mean, I don't make the news, or I don't make the rules, Anthony Noto. Can you imagine how much the stock would go up if he came on this show? Probably nothing. Might actually fall. Who knows? Let's go ahead and listen to Anthony Noto's new interview where he's got some things to say.
That's right. I'm joined now by Anthony Noto.
Let's make sure all the volume's good.
The CEO of SoFi. Thanks so much for joining us here. Before we talk about your business, I want to talk more big picture about the conversation here in Sun Valley, specifically about the state of the economy, given your purview through your business, as well as the conversations you've been having with other CEOs. What's your sense of the economy right now?
Yeah, I'd say the conversation really kind of pivots around 2 points. One is where's the consumer, how are they performing from a credit standpoint, and where interest rates going in the economy. On the interest rate point, we came out of Q1 having reported 26% year-over-year revenue growth with really no growth in our lending business, which is a really strong quarter, and we're really pleased with how things have gone since then. We've came out of that quarter thinking there'd be 1 to 2 rate cuts and positioned our business to do that, which would give us still attractive revenue growth, maintaining profitability, but just as importantly, having a strong balance sheet to take advantage of when rates go down.
Let's just capture that one little sentence there. Maintain profitability, okay? So for the naysayers out there, the very few, I'm not saying this is a big statement, but for the few who are saying that it'll be, a miss or something like this, and that we might actually see a negative quarter in Q2, I don't think that he would be out fully knowing what has happened in Q2 and still maintain these types of sentiments, right? So he might change his wording. He might actually come out and say, hey, we need to revise guidance. They have done that before, okay? The one time where they did miss because student loans actually got pushed out, they came out and said, hey guys, it's not going to be as expected. These are the reasons why. They have not come out and said that. I do not think we are going to see negatives this quarter. Let's just push it back just a little bit so we can rehear that sentence once again.
How things have gone since then. We've came out of that quarter thinking there'd be 1 to 2 rate cuts and positioned our business to do that, which would give us still attractive revenue growth, maintaining profitability, but just as importantly, having a strong balance sheet to take advantage of when rates go down. I think the consensus view is starting to come into picture, and people will believe we'll continue to get the data points on inflation, continue to see an uptick in unemployment, but not too bad, and we'll have 1 to 2 rate cuts by the end of the year, which would be really positive. As it relates to the consumer, we've seen really good trends in spending. We've seen really strong demand for refinancing personal loans as people are trying to lower their debt so they can make sure they're planning for the future. So overall, our company's performed really well in this environment. I'm glad we took the stance of lower rate cuts than everyone else because it's positioned us now to benefit when rates start to come down. So I like how we're positioned. And for the first time, I'd say in 2 years, there's a more central consensus view about rates and where credit is. And credit actually has performed relatively well throughout the year. And that's something I heard from a couple CEOs last night. And we're really happy with where it's performed as well, in line with our tolerance levels and our expectations. So all in all,
credit is performing along our guidance lines and our expectations. We are not seeing red flags here at all. So unlike what we saw, yes, exactly, B-dubs. Unlike what we saw during KBW's report, the short report yesterday, where they literally came out and told investors, short this company, for the Q2 earnings. He's saying, credit's looking good, consumers looking fine. This is exactly where we expected to be. And unlike the interviews before, where he was really uncertain about the interest rate environment, he is not seeming this way at all. He's saying there's a lot of consensus, actually, and we do believe there's going to be cuts this year. let's go ahead and continue.
I think we're setting up for a pretty strong back half of the year in 2025 if we get the right fiscal policy.
Well, we're going to talk more about fiscal policy in a minute, but I just want to return to something you said. I know you've been introducing new things such as alternative investments, but also you mentioned you're not doing as many student loans. What is behind that policy, and where are you shifting your focus to effectively follow or lead consumers and where you want to be growing the business?
Sure. As we came into 2024, there was a view that actually rates would be cut 4 or 5 times. And we believed that for rates to be cut that frequently, there would have to be a recession or some type of underlying problem. It turns out we'll get 1 to 2 rate cuts, which is where we've been positioned. And as we thought about the environment and thought about how much we invested in our financial services business, our SoFi Money product, our SoFi Invest product, our credit card product, as well as our technology platform, we had an opportunity to drive really strong growth there at 50% and really.
Before he gets into the other segments of the business, I want to just go back just a real quick second, but also he did talk about rates getting cut. There were some talks about rates getting cut 6 times that year. One thing that SoFi was saying is like, okay, that's going to benefit our ability to sell fixed income products, right? Like and by sell, I don't mean giving it out to consumers. I mean, the loans that they've already given out to consumers, well, there are a bunch of financial institutions, insurance companies that would love to get their hands on those loans because they would pay a very high coupon rate comparatively to other loans that would be out on the marketplace. So they would buy it in secondary markets off of, SoFi directly. So that sort of thing is what they're talking about with, benefits for interest rate cuts for SoFi. But also what Anthony Noto is pointing out is, okay, if there is going to be 4, 5, 6 interest rate cuts, what's that? What had to have happened for that to be the necessary case that the Fed would do that? And that would mean, lots of lost jobs, lots of potential, potentially deflation or something like this that might actually hurt the economy as well. So 1 to 2 rate cuts might actually be the healthiest way out of this and could mean that SoFi is poised for a very healthy, return to normalized interest rates, maybe getting down into 4, 3%, something like that in the midterm, but also allowing for consumers to still be healthy. Some may say that's a soft landing. Who knows?
At 50%. And really pull back in the lending business to be more conservative, to wait to see where the economy shakes out, where interest rates shake out. And now we're coming into a picture where that's a lot clearer. So we've delivered really strong growth without really using the lending business to help drive it. And now we're in a position where, as we go into 2025, to use both.
Now, of course, your business all started with student loans. And then just last week, a federal appeals court allowed a key part of Biden's student loan repayment plan to resume, staying in an order that had temporarily blocked it. Now, there's been a lot of back and forth on this, but how does Biden's efforts to repay student loans impact your business? And how do you see some of these legal changes and sort of the whole appeals process and the outcomes impacting your business going forward?
Yeah, we've really focused on people that have private student loans. Those are people that are still managing their cost and giving them cost savings on refinancing their private student loans. And that's been a smart strategy. It's a much smaller percent of our business. We gave guidance that we'll do close to $2.5 billion of revenue this year. We'll see really strong growth from the other businesses. So we're much less dependent on it. The fact that we grew 26% year over year in Q1 with no growth in lending overall is a great indication that we've invested in other areas that are really paying.
I love that travel got its own segment on this picture here, but it is very true, right? We need to break this stigma of the fact that this is a student loan company. It actually makes up for a pretty small portion, and the one thing that people also don't realize is the quality of the borrower that they are giving out for student loans. Like, all the actions that Biden has with canceling student loans are not I can almost guarantee you, there's always going to be edge cases that bleed through, but the people who are getting any sort of forgiveness wasn't even on SoFi's radar to begin with. Okay, we're looking for doctors, we're looking for lawyers, we are looking for very high income individuals who continue to have student loan debt, who are late into their 30s, who are, potentially still have held on to those student loans, but are now starting to make money, and they're, becoming money conscious and are really starting to realize that they need to pay this off. And what's the best way to pay it off? Well, get it to a provider with lower interest rates than what the federal government might be offering you, and the federal government's not going to be offering you a better rate because they just take all of the loans and just sort of stick them all together and just say, okay, here's the one, median rate that we can give out. So it actually allows them to give better rates than what we could with, just a general public loan. But anyway,
paying off for us. And the response that we're seeing for consumers in our SoFi Money product with 4.6% interest rate, SoFi Invest product, as you mentioned, offering them alternative assets and now IPOs. We've seen a great response there, and it's allowed us to go after other growth areas and not be so vulnerable to the whims of where the political or winds are blowing as it relates to student loans. I will say this, we've done well with a high rate environment and uncertainty around credit. I'm really excited about what will happen when rates start to come down, and you can start to see the light at the end of the tunnel. When rates come down, we'll see a real pickup in student loan refinancing. Right now, there are people with rates at 7 to 8% student loans, but we only can offer them in the 6s. As rates come down, we can start to offer them in the low 5s and maybe in high 4s. So that business will pick up. Our home loan business had historically been a refinancing business. We've invested a lot in being able to do purchase home loans, and we're now seeing that.
Before he gets a little bit further, there had been some comments where people are saying, SoFi can't continue to, well, not just SoFi, but people are making direct comments at me saying, you can't keep giving a hall pass to SoFi just because they, rates aren't coming down. Like the business has to execute even, regardless of where interest rates are. But that's not necessarily true whenever it comes to lenders. I mean, they are so interest rates are the heaviest gravity for SoFi. So if we continue to have high interest rates, that is going to be a massive weight on SoFi's shoulders because they just can't simply price out certain loans. It affects both sides of the lending spectrum. One, they can't get interest rates low enough to beat their competitors because their cost of borrowing is so high. But then also at the very high end, there is a federal limit to how much they can charge for APRs for loans. I think it's 36%. So that also affects the upper bound limit of what you can get for an extremely risky borrower, or not even extremely risky, just a B lender type borrower. So it is extremely tough on SoFi. Remember, they still are a lending company. It makes up for a large bulk of their overall income. But let's continue on because he's about to talk a little bit about some home loans here.
That pick up and gaining market share there. And we've recently made the decision on home equity lines to give people even lower costs of debt. So as rates come down, we'll see a real.
We recently decided to give people home equity lines of credit. Just keep that in mind. We'll talk about that after.
I'll pick up, and as long as the economy is stable and inflation is stable.
So you've mentioned various ways that your business is growing, but your stock is way down. Stock's down about 35% year to date, down about 19% since your last earnings report. I know that you have earnings coming up in a few weeks, so you're limited in terms of how many specifics you can share. But what's your message to investors? Why should they hold on when the stock is down so dramatically?
Yeah. The thing that we can control is our strategy and our execution. And for the last 7.5 years, our strategy has been consistent and our execution has been consistent. We've driven good, steady growth. When I joined the company, we had less than $300 million of revenue in 2018. Now we're over $2 billion of revenue. We weren't generating profits. We weren't generating positive EBITDA. Now we're generating both positive EBITDA and GAAP profitability. So I'm really pleased with what we're doing. In terms of the stock, I'm equally disappointed. I'm a big investor. Our employees are large investors. What we've seen and what we believe is happening is that the group of fintech companies that have credit exposure has been really hit hard. And they've been hit hard because of the uncertainty around interest rates. When will interest rates peak? And when will credit peak? And as I mentioned, we're really pleased with where credit's performed. We expected it to pick up a little bit, but it's within our tolerance levels. So good sign there. And as I mentioned, 1 to 2 rate cuts would be welcomed. And
good sign on lending. Do you think he's making comments like this about good signs on lending? Yes, it picked up to 5%. Like that's what he's saying. Yeah, it's not going the complete right direction for us, but there is going to be normalization. They did say that. I do think it's going to continue going up this quarter. It's just, does it get to the levels of what these bears and these short reports are saying of going from 5 to 6.7%? Some are saying upwards of 7.1% net charge-offs on personal loans. I'm calling BS. We'll have to see. That's just in a couple weeks, though. Like the bet is going to be fine. Like we're going to know who the winner is very shortly.
moving in the right direction.
And what about AI? Will SoFi be the one to bring AI to retail banking, and will that really accelerate your results?
Yeah, there's a whole spectrum of technologies that we use every day to ensure that our product is safe, it's reliable, and we can be a trusted partner. Where we want to use AI is to fortify those areas, but we also want to use it to answer 3 questions every day. Because this is a financial show and we operate in a financial world, people want to talk about interest rates and consumer spending. We don't spend a ton of time talking about the product, but we are a product company, and my vision for the product is that you open up SoFi every day and you go to your member home feed, just like you would to your Twitter home feed or your Facebook home feed or LinkedIn home feed, but we answer 3 questions for you in a personalized way. What must you do in your financial life that day? What should you do, and what can you do? AI allows us to take all the data about you and everyone else and answer those 3 questions.
Just a final question about politics.
Product forward company. I mean, it sure is a statement. I want to see it. This is definitely the thing with SoFi. Whenever people compare it to like Robinhood or whatever, SoFi is really, really in the basket of companies that is trying to help their consumers really make good financial decisions. They're trying to bring financial education to the table as well. And I hope that leaves a good taste in their customers' mouths. But the opposite is true with Robinhood, where I find with a lot of the things that they end up putting out, it's a little bit gamified. It's a little bit, here's a way to make extra risks and play with your money and have a little bit of fun. And I'm not necessarily saying that's bad. There is an amount of people that have that risk tolerance that would like to play with those sort of tools. But that's, I also think, the reason why SoFi is just not rushing to put out level 1 options right now is because they'd prefer to, get out things like private credit or, longer term ETFs, robo-advisor tools, HELOCs, these sort of things that are just a little bit more edging to a safer, more conservative, more, financially savvy style rather than gambling style.
I know the conversation about the presidential election is front and center here in Sun Valley. What outcome do you think would be best for the economy and for your business in particular?
Well, I'll make an analogy. I went to West Point and I played football, and I want Navy to win 364 days of the year. But on that one day when they play Army, I want Army to win. And so I'd be lying to you and being, less than disingenuous if I didn't say our business would benefit from a Republican administration. There's more capital markets activity. There's more M&A activity. I want our country to be very strong and vibrant. And on one particular day, I'll be rooting for one particular party.
Brother, Noto just said Trump 2024. yeah, SoFi, make America great again. No, but you know what? Like, that it is objectively true. If you're talking about stock price, pick Republican. That's what he's saying, right? So if he wants more capital market activity, more M&A activity, historically, that is just the facts. And I mean, from a CEO perspective, from a very capitalist company, a bank, it's probably what you want. I never would have thought that he would be talking about that on CNBC, but I don't hate it. Like, it's seemingly the way politics is getting more and more polarizing. And maybe this was the case later on, but me seeing it for myself now, being an adult, it's definitely extremely polarizing. You're seeing even people who probably wouldn't have said anything in previous elections start to speak out and say, hey, you know what? I'm voting for Trump. No, he didn't. Re-listen to what he said about that one day. What do you mean? Because he's saying, hey, you know what? You can spin it any way you want. He definitely said, I'm voting Republican. Even Kathy Wood did. Well, that's capitalism. If you want lower corporate tax, go Republican. I don't know. I don't think that that's a dividing sort of conversation. I'm not saying which one's right or which one's wrong. I'm saying if you're looking out for taxation, I mean, it's Republican. Kramer will be kissing Noto's But after President Trump invites the CEO of SoFi to the White House next January, okay, I don't know if that's going to happen, but yeah, it sure is interesting. So let's continue on this news. I was so happy with Anthony Noto on that call, though, because he answered the one question that I had, which is, if you're going to come out and say there's some problem with your credit performance, say it now. And he said, things are doing fine. Everything that we're expecting in our markers are right in where it should be. Boom. We are fine. Okay. So either you think he's lying or you think he's telling the truth. If he's lying, stop owning the stock. Okay. He hasn't lied to us yet. In fact, the only lies he's been spewing is the idea that he's saying, hey, we're going to bring in $5 to $10 million of net income, and then they bring in 40. Like, Anthony, come on, man. But that is not a bad lie. What would really, really, break my relationship with SoFi is if they're saying these sort of things and then we get so surprised to the downside on credit performance for their personal loan book. That would suck. And seriously, though, people really do think, and people say this about a lot of stocks. I mean, people say this about Nvidia too, even though Jensen's been building that company for 30 years. All of a sudden, he starts posting numbers, and this is a first quarter that these new investors are looking at the stock, and they go, they must be pumping the numbers. Are you kidding? Like, every single CEO in the world is screaming Jensen's name off rooftops saying, hey, we can't get enough of their product, and yet somehow they're faking it. Okay? So with SoFi, same thing, right? Are you going to take some guy that has had a relationship with Wall Street and banking and being a CFO for multiple years and say, all of a sudden, this dude's cooking the books, and although he's pouring millions and millions of his own dollars into the stock, he somehow is going to throw it all away and get caught this quarter? I don't know, guys. I don't know. Let's see here. Thoughts? Okay, so B-dubs, I actually just didn't see this comment, but thoughts on why Noto didn't bring up the shorts on the interview? I mean, I don't know if he was directly asked about it. Like, I don't think that it's appropriate for him to even bring it up. Like, he's not going to do what Alex Karp did and say, hey, these guys are a bunch of, bad words and everything like that. He's not going to do that. You have to remember that he's trying to garner the respect of the Federal Reserve and the OCC, the SEC. Like, he has a little bit more people to answer to than Alex Karp. And I mean, the dude's been outspoken since the beginning of time. Look at Anthony Noto. He's crisp. He's clean. You'll be hard pressed to see this dude swear. He's not going to come out and start bashing a bunch of shorts. He's just going to have to show them in his results. That's it. And if you have a long time horizon, then betting on a company that continues to outperform is probably not a bad bet. If you have a long time horizon, and if, the economy that they're working within doesn't crumble around them. There are some things that Noto and team can control, and then there's things that they can't control. Okay? Focus on the team, and the tide is eventually going to go in their favor. Like they said, we don't know when rates are going to cut. When they do, we are very confident that that is an environment that we can act very well in. Okay, they're positioning themselves with Wyndham Capital. They're positioning themselves with Technisys. They're positioning themselves with Galileo to say, hey, when things start to turn around, more VC money starts to pour into fintechs, more, institutional money comes in to buy fixed income products like personal loans and mortgages and student loans off secondary markets, we will have the inventory to sell them that stuff. Okay. And we're going to have the products to allow them to service their new fintechs that are getting funded. We want more M&A activity. We want more VC funding. SoFi is well positioned for this. And we'll have to see. Stockout made it sound like mentioning shorts would be positive. I mean, it might be, it might not. I don't think it matters, right? Tanner, Simcock bought today. Right here. Let me check. I don't know anything about that. Let me check. I think his name's Simon. No, it's not Simon Simcock, is it? He's our new general counsel or whatever. Bear with me. Let me go check the SEC filings. We'll do this right now. No, he did not buy. He got a bunch of RSUs. So there's your answer. No, he did not. At least not with his own dollars, you know? It is Simon Simcock? Okay. I don't have a bad memory. All right. Let's talk about the next big piece of news for SoFi. I thought that this was quite interesting. This got posted by the Market Union. I also saw a couple other people post it as well regarding them getting these emails. But SoFi is now offering 0% APRs for 15 months, plus a $200 cash bonus to sign up for their SoFi credit card. Okay? Holy crap. So, a couple of things. I don't necessarily think that this is a game changer in the credit card market or anything like this. This has been done. A bunch of financial institutions do this. What I think is extremely interesting is that SoFi has kind of been going the complete opposite direction with their credit cards as of late. So, as you can see, this is the most recent quarter, or this is their credit card portfolio since they've released it back in Q3 of 2020. But the amount of new cards that they've been signing on, at least for the large bulk, okay, is within the 20,000 range. At some points, it's dropped down as low as 14,000, and you'll see why. If I show you guys the actual losses on these credit cards, it really is starting to ramp up in losses around here, about 16 to 20% annualized losses on the balances that they're holding on their credit cards. Like, I mean, terrible, okay? But then what we got to see is starting to get like completely cut in half. You're talking, 9,500 new cards, 9,200 new cards. Yet we have more members than we've ever had before, and you're signing up less than half of what you're regularly signing up per quarter. So I'm thinking, okay, does no one want a 2% unlimited credit card? I mean, that beats out, 90+% of cards that have no annual fees. And yet, we're cutting it in half. And then I'm getting DMs and people reaching out saying, hey, I've got 800 credit scores and SoFi is declining me on a credit card. What the heck is going on? So I said to all these guys, I said, hey, they're just sort of trying to figure out their underwriting here. They're not taking it very fast. They're doing what Robinhood is doing, right? Let's put out some cards. Let's try to understand the cohorts that we're actually signing on here and make sure that we're getting our underwriting down pat. And then they go off and do something like this, 0% APR for 15 months. I mean, you're going to get such a large audience of people trying to sign up for this card and people that are already holding balances on their cards already. And then not only that, you still, just because someone has 0% APR does not mean that they're expecting to pay those loans back. They could be transferring for $200 and leaving the damn loans there until they go off and they can, default on those loans. It does happen. Okay. So that being said, this is and I'm not saying that this is a negative move from SoFi. I'm just saying this is definitely a change from what we've seen over the last 2 quarters. Now they've said this. They've said in the second half of 2024, we have really understood our credit card underwriting. And now it's seeming like they're going into a massive ramp. I mean, this is early on in July. We've got 5.5 months to freaking roll out a ton of credit cards. 15 months of APR. What's interesting about that as well is what is SoFi projecting will be interest rates after 15 months? What do they think the federal funds rate will be in 15 months? Because a lot of people are defaulting on credit cards. I'm thinking, this might actually be smart. You get a ton of new users saying, hey, the rates that I'm having to pay on my credit cards, upwards of, 28+ percentages, It's killing me. So can I end up deferring that interest rate on the current balance that I have for 15 months? And then maybe SoFi can start, reintroducing those payments or potentially them paying it off during that time back whenever an interest rate is much lower in 15 months from now. Who knows? So very, very different. Was not expecting news like this. And yeah, so it's 0% on just the transfers. It won't be 0% on each individual purchase thereafter. Robinhood will tell us our card sucks. I mean, hey, it all depends. I mean, do you want... Well, so, okay, this is what I'll actually say. One, as a consumer, 3% is better than 2.2. Okay? But if you're with SoFi and you have all your finances there, do you want to download Robinhood and then download the Robinhood credit card app, a separate app, so then you can go up by 0.8% APY or cash back? I don't know if everyone's going to be jumping through hoops for something like that. Nala, I know. Hold on, man. Hold on. I'll get there. It's in my notes. I got everything today. Don't you worry. But so, and also another thing is that consumers can make their decisions on whether or not Robinhood's card is right for them. The one thing that we haven't figured out is the Robinhood card right for Robinhood, right? We don't understand how they are going to be making enough money from the transactions to pay off the costs of something like 3% cash back. I mean, the amount of interchange that you would make tapping a card is around 1.8% roughly on interchange fees for credit cards. So unless they figured out some exceptional rate with Visa or something like this that I don't understand, then they are at a deficit right there. And then so, yes, you're going to make some money on the APRs that they're charging on the balances, the people that don't end up paying those cards back immediately. Yes, you're going to make a little bit back on the $5 a month or $50 a year from Robinhood Gold. But is it enough for 3% cash back? Is there a reason why no other offerer offers something like this? Is it because of corporate greed, or is it because of freaking profitability? So we don't know yet. We don't know how long this card's going to actually stick around. And mind you, I'm a shareholder in both companies. I hope they both stay around. I'm hoping, death to Citigroup and death to Wells Fargo and all the other banks that have terrible NPS scores for their customers and that people are not happy with. Just so everyone's aware, Wells Fargo has an NPS score of 4. SoFi's are around 85 plus. It's not even close. But I also wanted to showcase this as well. So one of the comments that they had made during that thing is they said, hey, we also, I'd recently made the decision to start offering home equity lines of credit. Okay. And data-driven investing actually recognized this and said, hey, I actually went in and looked at my mortgages or the mortgage tab. And yes, it's right there. And this was not what it was before. Before, it was actually saying, hey, we can get you a HELOC, but it's going to be with a third-party provider, and we're going to make some level of referral fee from that. But no, now this is actually done through Wyndham Capital or through SoFi, and we're going to be making the money there. So very exciting. The one thing, again, though, is if SoFi continued to put out this news in actual press releases, I think that it would do much better for the stock, because then people can look at the total market size of HELOCs and versus how many customers that they actually have or how many customers that they have for home loans in general. Like you can kind of price out opportunity, right? But if you don't tell investors anything, then we're just waiting 3 months to hear how good you actually had it, So I wish they had a better press team, better investor relations team. I'm not saying that they're not good guys or whatever. I mean, maybe they're great and they're being held back from saying, hey, that's not a priority right now. Answer these questions to these analysts, something like this. I don't know. But give the retail audience something, man. I would have loved to have seen this the day it actually came out. Okay, so now there was another piece of news. However, Josh has actually been on the channel. He's been on the SoFi Weekly. Josh, how you doing, buddy? In my opinion, with CPI coming in lower than expected tomorrow, okay, I've got you down there on your expectations. And what Noto said today, I plan on buying June 2026 leaps tomorrow, riding with Noto's pay plan. Wow, love it. So if you guys don't know, Josh has like a very large position, $1 million plus position in SoFi alone. Okay. I've seen it as high as $2 million whenever the stock runs up to like $11. I don't know where it's sitting right now, Josh, but like, thank you. Thank you for the $20. Appreciate it, man. Hope to have you on the SoFi Weekly again. Would love to have you again. Does a HELOC fall under lending or financial services? Lending, my friend. That is a home loan. You're betting against, well, not betting against your equity in the house, but that's what you're lending against. That's the collateral. But yeah. Yeah, lending but secured. Exactly. Okay. And much smaller than, traditional home loans. Much higher interest rates. Okay. Once again, though, I have another very interesting piece of news here, and I might as well be data-driven investing because I'm covering him multiple times today on the channel, but I find that he posts things that are great, and we need to cover it, and we need to follow him on X. But one of these things here is that we actually covered this article. Some people will see that I've shown off this picture. I absolutely love it, but I'm not the only person who found a ton of value in this screenshot that Data-Driven Investing found from Lending Club's stock investing team. You know who also really loved it? The freaking KBW guys yesterday. The short report that came out saying all of these nasty things about SoFi, bar for bar, just stole Data-Driven Investing's whole thing. Like even the wording and everything was all based around what Data-Driven Investing had just seen. You want updates on the latest short reports? Just go and read Data-Driven Investing's articles. And no, they did not quote him at all. And you want to know what's funny? He said this too, and this is absolutely true. I've been covering this stock well enough to remember this exact time. Last October, Dan Dolev actually went on and talked about how for every $100 million, he didn't put million, but every $100 million of GAAP net income, they make this much based on, no, I'm reading this all wrong. Tangible book value of $100 million will add in about $750 to $800 million of incremental lending. I shouldn't just read. I should just go off what I know about the statement because that was messing me all up. I had a thought in my head and then I was also reading and I was getting them all mixed up. Okay. But then he literally said this exact thing in his article, bar for bar. But I love Dan. Okay. So no crime. He must have, he's a fan. Who knows? But Timothy Switzer here, get the heck out of here. Credit my boy. But yeah, this is where people are doing their DD. This is legitimately the SoFi bears are doing their work by reading our stuff. Maybe that freaking David Chiavrini, maybe he's not actually a troll. Maybe he's actually in here. He's like, I need more content for whenever I put out my next short report. I'm just going to bet opposite. He's actually in here watching and commenting. Can you believe that? I just thought it was one of you guys. Jeez. But so what did we get today? Just to wrap up everything. We got an Anthony Noto call that cleared up my suspicions about potentially bad credit. You can bet on if you think he's lying, whether that's on fair value or on his talk about how bad, personal loans are doing right now and whether or not they're within his, healthy range. Or You can take a positive perspective and say, you know what? This management team that has been doing what they've said and more are probably not lying, and they're probably doing what they said and more right now. Like, I don't know how people always compare all of these tiny regional banks that show up like only locally to some people and say, oh, you know what? This bank is growing just as fast as SoFi. That's like ranking top of charts. Everyone knows about them. They're sponsoring, mega sports teams and going all over YouTube channels and are really capturing a lot of people's attention whenever it comes to like actual banks that treat customers the way they want to be treated. I don't know how you compare the two. There has to be some level of premium for culture and some level of coolness. And it's so hard for some value investors to wrap their brain around that, because they go, well, that's no way of investing. I mean, we need to see real numbers. But then whenever you look at some companies that have outperformed, like Nubank or Celsius or Tesla, it's like some of the first indicators of those companies doing well was, how cool are they? So looking past what the valuation is today, try to look at a little bit of outside perspective and see, what are the ratings that people are actually giving this bank? What are the sayings? How are people feeling whenever they use this? Go on YouTube and type in best banks at 2024 and see what the heck comes back. Because SoFi is making that list. And most times, a lot of the time, they are number one on that list if the list is American. That has to count for something. Word spreads. It's how Cash App and Venmo and all these places blew the heck up. Anyway, there's plagiarism plaguing these freaking Wall Street analysts that are shorting SoFi, taking data-driven investing's reports. We've got credit cards that doesn't know whether it's going to go up or down. I'm so excited to see this number, not only this quarter, but hopefully some commentary for this upcoming earnings. It's going to be a good time, guys. We're going back into earnings season. It starts this Friday. JP Morgan, Citigroup, Wells Fargo, all reporting. Love you guys. Thank you all so much for watching. Really do appreciate you guys coming out. But if you want to see more, you can hit subscribe. You can like the video if you want. But bye for now.